Hey, my homeowners, Joshua Sternberg from Sternberg Law Group. In this video, we are going to talk about second mortgages being spooked. Second mortgages, why are they spooked? Well, let's understand what a second mortgage is. You have your home, you have your first mortgage, and then behind your first mortgage, you have your second mortgage. So your second mortgage is only as strong as the value of your home compared to the amount owed on your first mortgage. If the value of your home is $500,000 and the amount owed on your first mortgage is $500,000, that's a break even for them. They are not secured by the value of your home. Again, if the value of your home is $500,000 and your first mortgage is $500,000, we've already reached that limit. The second is not worth anything. Let me show you a different example. If the value of your home is $700,000 and your first mortgage is $500,000, there's that $200,000 cushion between the value of $700,000 and the amount due on the first of $500,000 that a second mortgage can attach themselves to, or called their security position. Now, clarify some terminology. A second mortgage is always attached to the home. It's just whether or not they can squeeze out value compared to how much your house is worth and how much you owe on your first mortgage. When they lend the money, they always make sure that there's enough equity for them, but oftentimes the market changes. So why are second mortgages spooked? Because home values are starting to come down. If home values are starting to come down, the amount of equity cushion, the amount that makes them comfortable, is starting to disappear, and they are not in first position. They are always going to be paid off or serviced behind the first position loan. If there's a foreclosure, the first mortgage is paid off first. So seconds are spooked. Seconds are scared, biting their nails because they don't know what's going to happen to the market. So they are going to be very opportunistic. They are going to try to make deals now before the market continues to go backwards or while the market continues to go down. If you have a good attorney, you can use the understanding of these second mortgages being spooked to try to make good deals. Maybe they want to settle for $100,000, but you only want to offer them $50,000. Maybe they want an 8 or 9% interest rate, but you can get a 6 or 7% interest rate. Okay, so if you have a second that's in default or a second that's been dormant that is now being aggressive and coming after you, understand they are spooked as well. You have to know what you have in your corner, what ammunition you have. Don't go into a gunfight with a knife. Okay, make sure that you're educated, make sure that you're talking to an attorney, make sure that you're pulling title reports so that you can see what's due on these mortgages. Don't just jump in head first. The second mortgages are going to want to exercise their rights. What are the second mortgages' rights? They can foreclose. They can take your property. So you need to look at this as, how do I hold them off and make a deal with them? And right now is potentially an opportune time for you because the market is pulling back and the market has softened. Okay, there's a lot more that goes into understanding your second mortgage, especially if it's in default or has been dormant. Do not make these decisions on your own. I suggest you contact a local attorney. You can reach out to us at sternberglawgroup.com. Feel free to drop a comment below. We are here if you need us. Okay, my homeowners, remember, second mortgages are spooked, and that is good news for you.